So we have a solid jobs report. That sparked some modest gains in the market. Let's turn to our investors, see where we do some stock market work on this whole story. We got Lee Munson. He's Chief Investment Officer at Portfolio, and Jim LeCamp, Senior VP of Investments at UBS. Lee Munson, just real quick on this Greek default. Okay, so you're going to trigger some credit default payments. Is this a big deal? Should people worry about this? It all seems orderly, discounted, fine, no Lehman event. Just wrap it down for me real fast.
I think this is the event that we can finally say we can put the nail in the coffin of having to cover Greece every single day. So let's move on and go to the next fire.
All right, next fire. I appreciate that. Jim LeCamp, I know you like to look for the worst, so I want to make the same question to you. And I want to flip to you also the issues of potential debt swaps and credit default events in Spain, Italy, Portugal. Just give me a quick wrap down on that.
Yeah, you hit the nail on the head. 17% is where Greek paper was yielding right after this event this afternoon. So we're not even done with Greece yet. They've got elections coming up in a month. Now Portugal and Ireland and all these other countries, the private sector is going to say, you know what, maybe I'm not going to accept the deal because I am going to get paid on a credit default swap. $3.2 billion, no big deal. These other countries, very big deal.
All right, so we'll wait to see from the other countries. Thank you for that. Now, Lee, other thing that I think is more important is China. And China's soft landing of 7.5% may not be that soft. You know these numbers. They reported out manufacturing up 11.5%, retail sales up close to 15%. Now that suggests that China is still alive and well, and instead of growing at 7.5%, maybe they grow at 8 or at even 9%. Is that bullish? It sounds bullish. Is it bullish?
Well, I think it is. What people have to remember in America is that China's main purchaser of their exports is the Eurozone. It's not America. Europe is #1 to China. So if Europe is actually going to survive and muddle through this without a recession that's deep and awful and depression-like, then you're naturally going to start revising numbers up in China. And I think if the Eurozone looks good, you're going to have a leverage effect and a multiplier on all the current numbers on China. I think you're going to have a very, very good second half for China and the U.S. and the Eurozone.
All right. Jim LeCamp, on the other hand, energy and commodity materials and industrials were at the bottom of the ladder this week in the S&P major sectors. Why is that? If China's doing better and the U.S. is doing better and we're creating more jobs here, why are these cyclical growth industries not doing better?
Well, hold on. China's not doing better. They're doing okay. They might be doing better than expectations, but they're not doing better. They revised the numbers downward, and we're seeing numbers revised downward across the globe. Brazil is easing. The ECB is easing. The Bank of England is easing. U.S., we're still easing. If things are so hot and really improving so much, why is everybody in the world easing?
So that sounds great, man.
Yeah,
that sounds great. If they're all easing, isn't that good? I mean, in the long run, it's probably terrible. But in the short run, it's probably good. Yes?
I agree, but this notion that growth is better than expectations, it's actually coming in below expectations in both China and Europe. So I think we have to be very careful here.
I think China's coming in above.
No, we're coming in from a bottom. We revised so downward in the Q4. This is just still the lag effect. We're coming off a very low base. Remember, the market price is at the margin. I think the margin is going to get popped up. We're going to have a good time.
Lee Munson, what's your strategy?
Hang on, Lee.
Wait, hang on. What's your strategy, Lee? Let's go back. Let's come home to the U.S. Let's say China is doing okay. It's not going to crash. It may be better than we think. Europe problem is not going to implode either. No Lehman event. Okay, so the U.S. jobs are doing better than we thought. Not unemployment, but at least jobs. What's your take here in the U.S.? You got easy money from the Fed, right? You got modest rise in profits. What's your strategy?
You know, my strategy, first of all, is look at what people don't like. You're right. We've got small businesses hiring. We have actual real income increasing because people are working more hours and underemployment's going down. And we also have sales like in autos up 12% year over year, retail sales up almost 7% year over year. The only real boogeyman out there is oil, the price of oil being high. So what I've done with my clients, we have 20-30% exposure strictly in energy. So if you don't like the high price of oil, Larry, and you're not going to get the tax cuts that you want, then start investing alongside of it. And I think that's a #1 thing that you can do. Also, look at the transports. We like CSX. We're adding to it this week because, coal got killed and the price of CSX was down a lot. So I think that you have to look at those mitigating factors. We're doing well in this country. And all that happens, there's no gas tax. It just means somebody's going to put off buying an iPad 3 to stuff into the coffers of ExxonMobil.
Jim LeCamp, what is your strategy? You heard Brother Munson. You agree with him? You got your own strategy? Give us some hints.
I don't have any problem, actually, with the areas that he likes. I like him quite a bit, but I like technology. I like companies that are able to grow despite what the economy's doing. That's why I like Apple, and I like technology. But I also like the metals because of the massive amount of quantitative easing, and now it's competitive quantitative easing going on around the world. Finally, I think you can put some dividend achievers in to scratch out returns, especially large cap names that do business on a global basis.
Jim LeCamp, quickly, is this election playing a role in your thinking? Romney, Obama, etc. Is that playing a role in your portfolio?
Yes, the election is very unclear. And if you look at the history of election years in this country, when you go into the summer and the election's unclear, then stocks suffer a little bit. And it's seasonally an unfriendly time for stocks anyway. So I think we have to be very careful moving in until we get some clarity about the elections.
Lee Munson, is the rally coming to an end because we don't have election clarity? I'll give you the last word.
Finally, there's something for me and Jim to have a border war between Texas and New Mexico. I don't think the election has anything to do with anything. Why? Because we have a Republican Congress, and so I don't think there's anything that's going to happen. So I think that I love Jim's idea about the energy. I like that we agree. But boy, election, I've got to draw the line right there. Don't think it makes a difference.
Are they voting? Are they not voting in New Mexico? At some point, they have to vote there.
We may have a budget war before the election as well.
All right,
a budget ceiling debate.
Well, we might have a budget war, but we have a lot of natural resources.
There's a big tax hike coming if you don't get a change of our parliament. There's a big tax hike coming in 9 months, and that
I don't think it's going to happen.
All right, well, that's good. We'll have you back. We'll see. We'll assess. Thank you, gentlemen. Lee Munson, Jim LeCamp, appreciate it. Next, a video you have to see. An American Airlines flight attendant over the intercom says the plane was about to crash and mentions 9/11. Passengers had to restrain her. It's all caught on tape. It's incredible. You'll see it in the news headlines up next.